good afternoon, everybody. Or in the words of a very well-respected colleague of mine, a very, very good afternoon to you all. I'm taking over the reins of Michael Weir today. He would normally be here hosting a special credit and coffee session with Paul Randall, the CEO of Creditinfo. So hi, Paul. How are you? It's lovely to see you.
Hi. Yeah, nice to see you. Thanks for inviting us to this little chat. Really
You're
excited.
welcome. Good to see you. So you're the CEO of Creditinfo, and for those who don't know, Creditinfo is a valued partner of Atradius Collections. We recently built our partnership to offer support to existing and new Creditinfo customers to collect their accounts receivables and enable them to trade and grow their business no matter where in the world they trade. So just a bit of a brief introduction that, we know that credit information and debt collection often go hand in hand to support successful credit management processes. So today we're going to have a little chat about topics affecting both our customers and our organisations, such as the rise in inflation, interest rates, COVID, and obviously the Ukraine war, and how both Creditinfo and Atradius Collections are supporting its customers to trade in the current climate. So Paul, to kick us off, could you tell me a little bit more about you, Creditinfo, and why the partnership with Atradius Collections is so valuable to your customers?
Sure. Yeah. So I've been around in the credit industry for over 30 years. I was working for retailers, for banks, and credit bureaus, and I joined Creditinfo about 15 years ago, and had a number of different roles, ending up in the current role of CEO. So I think the Creditinfo started in Iceland, and then became very much focused on smaller countries in Europe. And subsequently, over the last 10 years, we've grown from ground upwards a portfolio of markets, implementing credit bureaus and running and operating credit bureaus across Africa and Asia, as well as Eastern Europe. And so, we have this quite varied, situation at the moment in terms of our global footprint, but very exciting as well. And really, we are providing a lot of information to a lot of companies who are trading internationally frequently. And we felt it was so important that when they did have customers who were getting into troubles, we had a partner we could introduce them to, who would be able to then follow up and help them collect that international debt, which really is why we came to Atradius.
Good. Yeah. I mean, yeah, we're very similar organisations. And as I say, credit information and debt collection goes very much hand in hand. But when we look at the current climate, I mean, we see it's a bit of a perfect storm at the moment. We just come out of a period where liquidity has been very high due to a lot of government and fiscal support around the world, not just in particular countries. I mean, this has been a global thing. And in early 2020, we saw concern in all markets surrounding late payment as customers turned to organisations like Atradius Collections to support and, secure their receivables. But of course, later in that year, when the government support started to kick in, actually, there was an unprecedented effect on payment behaviour where liquidity increased. And whilst levels of trade were hit in some sectors, actually payments were made on time. And actually, I read today in the press that actually the Bank of England is now forecasting a recession, particularly in the UK, in the second half of the year. So the last 2 years have been, been completely unprecedented. I mean, I've never seen anything like it. The swing in payment behaviour is incredible. What are your thoughts on that?
Yes, I mean we've seen a lot of those similar trends that you mentioned, both on the business payment side, but also on the consumer side. Obviously, we're also working quite a lot on the consumer side. And we saw a lot of that trend where we saw an immediate drop in usage and lending beginning of first half of 2020.
Yeah.
And then over time, we saw that the growth come back, and then often in 2021, we sort of rebound, and people sort of a lot of catch up on the amount of lending. But what was was interesting, that pace of recovery and rebound often depended on the automation and digitalization of lenders and borrowers. So we did see some slight changes in there. There was one big exception actually. We were in Iceland, our home country, as it were. There, the change in interest rates saw a real spike in the increase in refinancing of mortgages.
Yeah.
And so and there we saw almost it felt like all mortgages were refinanced in the middle of 2020, and we saw some levels of business were totally unprecedented. So we have seen some different trends. So it's important that we have, as in your business, a clear understanding of the local trends as well as the overall global trends.
Yeah, yeah, yeah. No, I agree. I mean, when I look at the collections perspective, even though the payment behaviour has differed quite drastically over the last 2 years, and I think is set to change even further now. I mean, we've seen success rates, I would say, hold up very well in the last 2 years. But the main thing that will impact us as a collection agency is, of course, any increase in insolvencies. We know that that's all forecasted, but I know that if we look at globally, generally, there's been a global decline in the rate of insolvencies between 2020 and 2021. And if we look at some European countries in particular, I know Portugal stands out that they had a sudden drop in insolvencies. And we think mainly due to changes in their insolvency laws. And of course, as government supports seems to peter out and changes in those, whether they were temporary changes, they start to return back to normality, we think that those insolvencies will pick up again. The same in the Netherlands, actually, they also had a drop in insolvencies. However, not in all countries. I mean, in contrast, there were some countries actually that increased in insolvencies in 2021, such as Spain, Czech Republic, and Italy. But I mean, if we take a little bit closer to home, particularly in the UK, what I would say from a Atradius Collections perspective, we've actually seen the number of insolvencies this year starting to creep up now. So January, February, and March was the highest actually this year. Still to run the April numbers, but certainly, yeah, it's that we do see a negative trend in the insolvencies. So, Paul, what are the challenges your customers are facing at the moment?
So, as we're seeing a lot of cost increase. We're seeing as you mentioned, the collections start to increase. And so there's a lot of review internally about processes, about automation, potentially using SCORE to make sure that the quality of decision is the best possible. So we're having conversations with our customers about how they may be able to automate some of those processes, how they may be able to use scores, data to really provide a good quality decision, but perhaps with some further manual overrides and a review in some cases for the larger decisions that they may be making. And often they're looking to perhaps use software as a service as the basis of that.
Yeah.
In some cases, historically, particularly some of the larger financial institutions have been reluctant to use software as a service. But I think there's a maturity in terms of the understanding of the benefits this can bring, and some real needs to bring change quicker. Which, if a service is already there, they're very quick to be able to use and be able to switch on and really accelerate the process of automation.
Yeah. So is this something that you had in your plan generally, that there's just been speeded up by the current climate, or is this something completely new for Creditinfo?
No, it's a part of our business that we've had for some time, but it's also something that I suppose we've seen the need, and so we've been refining the processes. We've also been, whereas in the past it may have been more consumer based, we're really seeing the need now for small businesses and perhaps even for larger businesses, but smaller value decisions.
Yeah.
And so we've been working also a lot on our business scores. So, so we've been able to try and make sure that we have scores for each size of business to be able to put into this automated process. And also, we've been working very closely with the lenders to understand what business rules they want to overlay as well as the automated score.
Yeah, that's interesting. I mean, we're also finding the use of data particularly interesting to support our customers, because, obviously from a collections perspective, the more data that we have, the more intelligence we can put around our collection strategies to make sure that we're contacting the right debtors at the right time in order to increase the potential collected amounts and, of course, make ourselves much more efficient so that we can handle, more cases. Something else interesting that we're hearing from our customers, and it's a little bit around the automation, but some of the challenges they're having is around a skill shortage. So, of course, they're expecting to do more with less. So automation is hugely important to them. But some of our customers now are saying because of this distinct skill shortage in credit management, they've been asking us to take over the whole credit control process altogether. So rather than just outsourcing at the very end at the debt collection, we're moving much more into preventative services actually to support customers either on a temporary or permanent basis, either taking over the credit control activities for either full ledger or just part of the ledger, maybe on the smaller end, allowing our customers to free up resources to the bigger end and their bigger customers, so that they can redirect their resources in a more efficient way. So
that's interesting because for us, we see particularly with people, with the focus on collections and customer management, perhaps organizations are going to have less new customers, so they want to better manage their existing portfolios. So we're also working a lot on providing alerts at an early stage in case you have a customer who's got other credit lines and they want to be aware if there are some early indications of defaults or missed payments, and we're flagging that, we're able to flag those up to customers so then they can implement those preventative actions and start engaging the customer and discussing what the best option will be. Similarly, on that customer management side, we've got the other side where they want to really maximize the benefits they have from existing customers. So they're also looking for opportunities to really upsell and really focus on their own customers, their existing customers, to make sure that they're providing them the full portfolio of products available.
Yeah, of course, because we think of intelligence about getting alerts on changes of financial status or developments of a company. We always think of it as being maybe negative, let me know when it's going wrong. But actually, the alerts can work in a different way, that it can actually let people know when things are going right, and they can continue to sell more actually to those existing customers. Yeah.
If you've got customers who've got an outstanding credit line and they're coming to the end of that credit line, then that they could well want and afford a renewal or a new credit line that will supplement their previous credits that they've had already. We're also looking perhaps at limit management, customers who want to increase existing exposure to their best customers and really provide competitive rates and limits to those customers.
Yeah, sounds good.
With the change of macroeconomic climate, are you seeing a different group of customers starting to come to you asking for your services in different geographic locations, or are you just seeing larger volumes for your existing customer base?
It's a good one, actually. I mean, our existing customers, we know that they're starting to use us a little bit more because obviously trade was limited during the pandemic. So we are seeing an increase of our business for our existing customers. But also we're seeing actually a demand from new business. As you say, the change in circumstances, and I think the change in economic situations around the world are driving customers to think a little bit more about their credit management process. But in general, if I look at our customer base, we have all different types of customers. So, of course, we are there to support our insured customers around the world and to complement their insurance policies. So our collection service is an integral part of their policy, which supports their credit management. But we also have a non-insured customer base, which can range from small SMEs, which has got one debt a year, that really needs help, whether it be on a domestic or more likely to be an overseas, where they're struggling with language or time differences. But with them, so we range from those small SMEs right the way up to large multinational organizations that need a global solution. And some of our customers pass us hundreds of cases of receivables every month. As you know, we're in 34 countries. Atradius Collections is in 34 countries now. We're a perfect fit for those multinational companies, whether they act on a centralized or decentralized basis. But as I mentioned earlier, I think, third-party collections is just one part of what we do. We're entering much earlier into the credit management chain, so that we're able to support our customers to prevent overdues as opposed to fix it at the end. So we're looking much more into the preventative services so that we're able to support customers with any issues earlier on in the credit control cycle. And that could either be on a temporary or a permanent basis. Yeah.
And I think those changes are very much in line with what COVID taught us. If anything else, we have, as both individuals and businesses, both we have to change, but also we have the ability to change and change quickly.
Absolutely.
And I think that's going to be very much the story going into whatever we face in the coming years, 18 months, to be able to adapt the businesses, to be able to listen to our customers and really, deliver what they need in that situation. And I think some of the solutions that we've talked about today are really the ones that I think will be ready to be a starting place and then to be adapted for our customers. I think we just all hope that we can embrace the change and really deliver the needs of our customers over the coming months and years.
Yeah, sounds great, Paul. Well, I hope that all that includes a long and fruitful partnership with the Atradius Collections. And it's been really lovely to talk today, and I hope everybody has enjoyed the conversation. So yes. Take care.
Thank you very much for the introduction and bringing us into your discussions today. Really enjoyed it.
Thanks,
Thank
Paul.
You very much.
Have a great weekend. Thank you.
Bye-bye. Have a good weekend. Bye-bye.
Bye.